Joseph, the iron ore price keeps going down. It's gone to a 5-year low. We do talk about this a lot, but it keeps going down. Is it the supply side, the demand issues? What's going on?
We're a long way away from $100 a ton, which is where people used to think iron ore prices would hold. Today, they fell to below $80 a ton for delivery into China, and China is the issue here. On the demand side, like fixed asset investment, so infrastructure and so on, is at its lowest pace
in China.
Since the beginning of the century, which is not great. And the Li Keqiang index, which is all of these indicators you use instead of the GDP growth number, so like railway cargoes and so on, electricity. Those are also at their lowest point since financial crisis. So on the demand side, it's not looking great for steel making and other uses for iron ore. On the supply side, however, well, we know capacity has been coming on like bonkers at the really big producers, Rio Tinto, BHP Billiton, even Brazil's Vale. And that's kind of been the point for them, because they can get all out of the ground at quite low cost. And so even if the price does fall below $80 and stays there, or goes to 70 even,
they're okay with it.
They're okay. I mean, well, margins are smaller,
Yeah.
and as a shareholder, you should ask, is that okay with you? But they would argue, well, look, we're adding capacity at quite low cost, and it means our operations will be low cost going forward. That assumes, however, that high-cost producers come out of the market.
And that story has been out there for some time. Analysts sort of told me years ago, oh, don't worry, there's kind of a floor there for the price. The high-cost producers in China, they will drop out. And have they dropped out?
Microeconomics 101 would say to you, yeah, of course they're going to drop out. But no, they haven't. Well, state-owned producers, their production is up a tenth year to date, according to J Capital. And that is because they're not really just responding to price incentives. If you're a state-owned enterprise mine supplying a state-owned enterprise steel mill, for example, it doesn't matter, you're just going to keep the supply going anyway, and just try and ramp up production to get costs down, which is ironically what BHP and Rio have been doing all along. And so they're not quite behaving in the way the low-cost miners would have liked
them to.
Yeah.
Bad news for Rio. Probably bad news for all of these guys.
Rio, 4/5 of profit come from iron ore. But so far this year, it's been interesting because Rio's share price is detached from the iron ore price quite a bit. I mean, it's still trading at a discount to more diversified miners, but investors seem to believe that the cost-cutting story makes sense and it can survive this price fall, again, because it has low-cost production. However, if the price keeps falling, what you're also looking from Rio and from other miners is cash returns. And the more the price falls, the less operating cash flow there's going to be.
Okay. Really interesting. Thanks a lot, Joseph.